How's everyone doing today? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, we're going to be taking a look at ICBA's Advocacy in Action for the fourth quarter of 2025. And as everybody knows, this is one of my favorite reports to cover. This is a quarterly report that's put out by the ICBA, and I love it because it's just put out as a two-page PDF. There is a link in the description down below to this PDF if you'd like to go take a look at it. But one of the great things is that they provide a snapshot for all of the major hot button regulatory issues going on in the banking industry right now. So I always love to cover this just to give people a quick overview of everything that is going on. So let's look at we'll start off by going to the right-hand side here. We'll look at real results for your bank. So one of the big things that happened here was trigger leads. This was a major piece of legislation that got signed into law. The legislation would restrict credit reporting agencies, that would be TransUnion, Equifax, Experian, from the sale of consumers' contact information when they apply for a residential mortgage, otherwise known as a trigger lead. This was signed into law on September 5th and becomes effective March of 2026. Trigger leads compromise consumer privacy, create a flood of unwanted solicitations, and create consumer confusion. ICBA played a critical role in passing this legislation. Permanent tax relief signed into law. So on July 4th, the One Big Beautiful Bill was signed into law by the president. The new permanently extended provisions of the Tax Cuts and Jobs Act includes individual rates, the estate tax, and the Section 199A deduction for Subchapter S banks. A version of ACRE is included, a 25% deduction for loans secured by agricultural land. The new law includes additional pro-growth provisions and raises support prices for farm commodities. And then finally, Congress repealed the overdraft rule. So Congress has passed and the president has signed a resolution to overturn the CFPB rule on overdraft. The president is expected to sign the resolution into law. Repeal of the overdraft rule has been an ICBA priority. The CFPB rule would have capped fees at banks and credit unions with more than $10 billion in assets, thereby harming customers and businesses they rely on overdraft. So again, and that was a very interesting conversation because on the one hand, with the overdraft thing, I could see how, people wanted that because there is a problem. And I said my take on that has always been it wasn't necessarily in the fee. Like people would say, oh, banks are charging, $35, whatever, for an overdraft fee or whatever. And, I always looked at it from a psychological perspective, right? Like you have to have a fee that is large enough that it's a deterrent for people. In other words, you don't want people overdrafting their account. And I would say 96%, 97% of customers don't overdraft their account. And if they do, maybe it happens once every couple of years, and the bank, and typically the bank is not going to charge them for that. You have a problem every once in a while, the bank's going to waive the fee. They're not going to beat you up if you're not what they're looking for is the habitual, people that are habitually, every week they're on the overdraft list 2, 3, 4 times. And so so you have those fee out there as a deterrent. What I don't like, and what I have talked about many times, is the kind of racking up, if you will, of these fees, where some banks, particularly some of the bigger banks, play this game of like, oh, they'll hit you for 5, 6, 7, 8 overdraft fees. The next thing you know, you owe them $300-400 in fees, and on something that overdrew your account by $100, and that's the kind of stuff that you look at where I'm just like, yeah, that's the part of the practice that I don't like. So, but again, we got this overdraft thing overturned, which I think was a good thing for the most part, though I do see why, again, some people on the consumer side would basically probably not be so happy with that. But okay, but that being said, let's go on to the things that are still rocking and rolling out there. Challenges to the 1071 rule and the statute. So ICBA continues to oppose the CFPB's 1071 rule, which requires lenders to collect and report personal data on small business credit applicants. Yes. So basically, if you're a small business owner, you don't want this 1071 rule, because this would require the bank to go out and collect a whole bunch of data on you. And this goes hand in hand. So I've had kind of 4 big regulatory issues that I've looked at all year. Beneficial ownership information, 1071 rule, open banking and CRA, changes to CRA. And you can't just look, one of those things by itself is not good. And you look at it and you go, but it was all of those things as a whole. When you talked about, beneficial ownership information, small business owners having to go and register all their information in this database, and then the 1071 rule collecting further information on every small business owner, and then the CRA forcing banks to do certain things, and then the 1033 rule basically allowing fintechs to come in and siphon all of your data as a consumer and a business, to just siphon all your data out of the bank. Just all these things collectively are just like, oh, no. We do not want this stuff. So, but the 1071 rule, and again, it's a rule. It's not a law. It's a rule. This was a rule that was put out by the CFPB. So basically now they're working on rewriting this rule to hopefully make it a little bit more palatable to banks. I would like to have seen it go away altogether. That hasn't happened, but they're working on a rewrite. So we'll keep an eye on that. Digital asset regulatory framework. So ICBA directly engaged with Congress on proposals developing regulatory framework for stablecoins and the broader digital asset market for several years. The Genius Act, which became law in July, included ICBA advocated provisions to preserve existing policy on Federal Reserve master accounts, disallow payment of yield or for interest of stablecoin issuers, and provide a pathway for bank issuance. So they're basically looking at the implementation of the Genius Act right now. But I would also remind people that there were two other bills, the Clarity Act and the Anti-CBDC Act, both passed by the House and are currently sitting in the Senate right now, waiting for them to vote on that and put that through. So obviously, I've called that the three-legged stool. And in order to have the full digital asset framework in place, we need to have all three of those bills put together and then implemented. And that's what's going to give you your full guardrails, if you will, your full digital asset regulatory framework. But we'll see what goes on with there. Deposit insurance is before Congress. So the Senate is considering deposit insurance legislation that would provide additional coverage for transaction accounts at all but the largest banks. Hopefully getting some larger deposit insurance coverage for business owners out there. I think that would be a very good thing. So we'll see what happens with that. The ACRE implementation. So with the enactment of ACRE as part of the One Big Beautiful Bill, ICBA is pressing Treasury to ensure the implementing rules qualified with a greater number of agricultural loans consistent with the statute. Further support for more agricultural lending and for farmers is calling in the works. ICBA calls on taxation for larger credit unions. Yes, absolutely. That should go in there. Legislation to lower the CBLR advances. So in September, the House Financial Services Committee passed legislation HR 5276, which will lower the range for the community bank leverage ratio from between 8 and 10% to between 6 and 8%. In addition, the bill would make the CBLR available to banks with up to $15 billion in assets, while currently only banks with assets up to $10 billion may elect to use the CBLR framework. So I think that's a good thing. Hopefully that will go through. Updated regulatory thresholds. So ICBA is working with Congress to update asset thresholds for the application of regulatory mandates across the board. Tiered regulation with appropriate thresholds recognizes the significant differences between community banks and large complex institutions in terms of the risks they pose to consumers and to the financial system. So I'm a big advocate of this. This could be a major game changer, these regulatory thresholds. So for people that don't know, when a bank crosses $1 billion in assets, the additional forms of regulation kick in. When a bank crosses the $10 billion threshold, a whole ton of new regulation kicks in. When a bank crosses the $50 billion threshold, more regulation kicks in. When you cross $100 billion, more regulation and things kick in. So, particularly, I think at the 1 billion and the 10 billion, like I'm hoping that those will get moved up. Like if they move the 1 billion threshold to say 5 billion and the 10 billion to say 15 billion, I think that would make an enormous difference for a lot of banks out there. So really keeping an eye on that one. ICBA check fraud task force. They're still, check fraud is just one of the largest frauds in the banking business. Still looking at that. The Dodd-Frank section, the 1033 rule, also known as the open banking rule, which I had mentioned a few moments ago. In August, the CFPB issued a proposed rule seeking recommendations for changes to the 1033 rule. While the final rule exempts community banks with assets of less than $850 billion, advocates by ICBA, it requires non-exempt banks to create and maintain an API-enabled developer portal, which non-bank fintechs and other third parties could use to access customer data, creating a threat to consumer data security and privacy. Now, this one is getting really big because you've got the fintech industry, which basically they want the data. They have been salivating. This has been their wet dream for many a year. They want to get their hands on this data. And more importantly, they don't just want the data. They want this data for free. And now JP Morgan and PNC Bank, their CEOs have come out and basically said, well, we could get comfortable with this if we could charge for the data. So basically turn this into another revenue stream. Again, that might sound great. I'm not interested in that. I'm a big advocate for privacy, people's privacy, and putting my data out there into the hands of Google and Meta and Facebook. That doesn't do anything for me. And I think a lot of people should be highly concerned about this 1033 rule, also known as open banking. ICBA did release a guide on open banking. I suggest people go check that out. I did cover that in another episode if you want to go look at that. And then finally, the Federal Housing Finance Agency, so the GSEs, and then also the Federal Home Loan Banking System. So the GSEs are Fannie Mae and Freddie Mac. I've done episodes on that, how they ended up in conservatorship. Should they come out of conservatorship? I think they should. I think they should come out right away. There's a whole bunch of reasons for that I'm not going to get into on this episode. But like I said, if you want to go check that out, I have a couple episodes out there on the channel. Like I said, you can look it up on YouTube. You can find those episodes to get more information on that. And then, the Biden administration was really beginning to mess with the federal home loan banking system. And I've always followed the rule there with that. If it ain't broke, don't fix it. Federal home loan banking system works really well for all their constituents. Leave them alone. Leave them alone. That system has worked well for almost 100 years. They're good. Okay, leave them be. So that's basically it. That therein is all of your hot button legislative issues for right now. Like I said, there is a link in the description down below if you want to go check this out. I hope this helped in just being informative and giving people a quick overview of all the regulatory things going on in the banking industry right now. Obviously, more to come on all of this information. And I will keep everyone up to date. You can bet on that. So with that being said, I will wrap up by saying if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I thank you for listening. Have a great day out there, and I will see everyone again real soon.